tunnel. Today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. This is my brief bio. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit optionsclearing.com so you can understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education and information purposes only. All right, let's jump into the market. We have delayed CPI data. Came in better than expected. Seems to be contained, especially when it comes to even consumer price. Some of the consumer prices for produce went down, and rent prices also. Shelter prices are going down, so that's positive, and market is trying to break out from all-time highs, right? So continue to grind higher. Let's look at yield. Yield, not a big reaction in CPI data, so bond market still under 4%, kind of fighting for this 4%, but it's a pattern of lower highs and lower lows, which is positive for the market. Dollar is near, kind of trading in a range, right? Since the Liberation Day, it's just kind of not going anywhere, so that's positive. VIX dropped back to 16 levels, so a lot less fear in the market, and QQQ is breaking out to all-time highs, right? Despite all the uncertainty with the tariff, closing out most of my hedges. Yeah, I mean, I probably would wait till end of the day to close most of my hedges. We could have a reversal by the end of the day, but it does look like, at least most market participants don't think there is a lot of risk going into next week for the tariff decision. But again, kind of similar setup into April 1st. A lot of people didn't think anything's going to happen, or the tariffs is going to take place, or they're not going to be as more aggressive. And then when you have downside surprise, market drops. So I think potentially I would wait, especially on spiders. My spiders hedge is basically at this point, very limited risk. So for now, I'm going to hold it. 2 year end, yes. From seasonality point of view, yes. Seasonality point of view, we are going into Christmas rally, and seasonality supports continuation of the rally. But I still think, I mean, if you were bearish before, maybe turn, I would still be bullish, but I would not have all long positions. I still think, at least me personally, I'm going to hold. Just in insurance, you buy insurance not because you think something's going to happen, but because you're buying if something's going to happen. And you can definitely see that a lot of people have that mindset, right? And this is one of the reasons why there is very little November positioning in SPX futures and puts buying, and most people are shifting into December, right? I mean, you might want to roll November into December, which is fine, but you can clearly see that people are hedging into December, which is at this point significant, $110 billion worth of hedges at the December expiration. So I think even if we do have pullbacks, more likely than not, it's not going to be 10-20%. It could be 5-10%. Same as insurance though. Okay. Fred, but sounds good. I agree. All right, so that's the market. What else? Small caps leading the rebound. They are not breaking out yet. Semiconductors leading the market, trying to break out, so that's positive. Gold and gold miners continue to consolidate, right? Gamma squeeze, where market makers will sell stock now, since there are no more buyers. Maybe not the end of the rally, like I said, but probably consolidation for a few weeks, maybe a few months. Bitcoin is still underperforming, right? I still think it's a great proxy for risk taking. Classical bottom building process. We're not we didn't break through the 107.50, briefly broke through the 107.50, 200-day moving average held. We're not making new lows for a week or two. It is a divergence, right? Usually Bitcoin is going together with NVIDIA and semiconductors. So it's been underperforming. That would be another bearish argument that, why is Bitcoin underperforming? But, if you're a Bitcoin enthusiast, then, this is a kind of a classical setup where if you have maybe longer term view, then you do want to maybe add to your Bitcoin exposure. Micron does look strong today, right? Micron is breaking out, I assume. Yeah, so Micron is trying to break out. This is one of the positions I have, so that's working, going in the right direction. Happy Friday, Russer. Z Fisher 8, welcome. El Mark, Cherry Blossom, Hydrated Muffin, Russer. I know some of you join a little bit later, so if you guys want to meet me in person, we have an opportunity, right? So Keith and I will both be live in CME building in Chicago. Opportunity to meet us in person. We're going to do presentation on different options topic and market topics. Maybe, what is it scheduled for it now? 9 a.m. to 3 p.m. We're going to have lunch, coffee, maybe drinks afterwards, and autographs, signing. So this is a great opportunity to meet, to see Chicago, right? Chicago is a beautiful place. Maybe, not, it's going to be a little bit cold there. But still, if you guys, I put it in both in Discord and in the Slack. I'm not Slack, Discord and GoToWebinar. Okay, what else is interesting? We talked about Bitcoin, crude oil, strong rebound. Fred Halliburton actually. It was pretty volatile. So when you trade these oil drillers, you do have to expect, high volatility. So size is important, right? We talked about 2.5% stop loss. So size is important because, I didn't think we're going to break to the 23 level, but we did, right? Consolidated and then on the earnings, kind of a classical rally. So that was a good trade. But, position size is important, right? Same thing with the Bitcoin. Right, if you were assuming that it's not going to break 108, and then at 102 you're down more than 2.5%, that this is where keeping journal is important, and then I would write it down. That's why I like to do half of the size, right? Because it gives me some room to think about it, whether this is a change of trend and this is, we're turning into a bear market, or this is an opportunity to add, right? So you always want to keep an eye on position size and that fear of future regret, right? That you get stopped out, right? And only to see that the market rebounds and going in your direction. It happens all the time. The only way that I know how to prevent these whipsaws is get the right position size, right? So on the $10,000 account, 2.5% stop loss, that's $250, and I always break it down into 2 trades. Right, so if it drops more than I expected, but still consolidating, then at least I have an opportunity to, make a decision. SPX is facing 6,800, right? 6,800. So we do have. Let's just look at the expiration. Flip point is still 66.50, right? So this is this week low. This week low is the flip point, where market makers will support the market as long as we stay above 66.50. And now the call wall is now 6,800, right? And the put wall is 6,700. So this is your support number 1. Right, so if you're aggressive short-term trader, I would consider buying at 6,700. Right, this is support number 1. This is resistance number 1. And then, if you have a little bit longer term perspective, you have 665. This is this week low, support number 2, right? And then last 2 weeks lows in where we're at 65.50. So those are your 3 support levels. And then the idea is that it doesn't matter what the style of trading you have, how long you hold in position, right? This is day trading. This is maybe, you hold position for a couple of days. This is more, momentum trading, swing trading, where you hold in position longer, a couple of weeks. The idea is not to be down more than $250. right? So if this is your risk, $250, then you just say, okay, at these levels, I take my, and you can use this logic for any positions, right? Whether it's a spider's position or QQQ positions or micron position, there a lot of stocks are highly correlated to the market. So you can say, okay, if let's say I hold the micron and we drop below 65.50, I want to be down only $100, right? And then you do the calculation of your stop loss. Halliburton, yeah, I mean, model usually is right in terms of momentum, right? But sometimes when you do have this negative news on tariffs, right, then you do have whipsaws. Now, U.S. is imposing sanctions on China, not China, on Russia, right? These additional sanctions on oil companies in Russia and penalizing China potentially and India for buying Russian oil, right? So potentially less oil on the market, and then the crude oil rallies, right? Or the opposite, right? So oil is also kind of in between these geopolitical risks. It's driven by news, and unfortunately, it's hard to time the news, but there was a signal, right? There was something happen in Halliburton where the model picked it up, above average volume here, right? And usually when you have these rallies above average volume, model picks it up, it's a strong signal. Obviously, in this case, because of geopolitical risks and tensions, there was a pullback, stronger than expected, but the momentum continues, right? Momentum continues. Right, and Vincent is actually a momentum trader, and I'm a momentum trader, so. All right. All right, Elmar, you gonna make it to Chicago? Rosser, you guys gonna be in Chicago? Cherry Blossom? You guys here every day? Try to make it. All right. And then stock forecast toolbox in terms of support and resistance levels. We actually upgraded to the new server. Thank you for patience. We got some issue, but send me your feedback. It's supposed to be much faster. Like, at least for me, it's a lot faster. A lot faster coming back. But anyway, spider supports 670, overhead resistance 673. We're at 676 on the better than expected inflation data, right? And less fear in the market about tariffs and earnings season, right? More focus on earnings season. 86% of the companies are beating the analyst estimates, and that provides another, and seasonality, right? This is a good recipe for just turning bullish. And model did turn bullish. At this point, it doesn't see retest of last couple weeks lows, but again, that could change on a dime if you do have any surprises. In terms of signal for today, let's look at some of the other signals. So healthcare, TMO, JC industrials, semiconductors, and energy, NOV. So we do, energy continues to rally. NOV was another signal. So you can, similar to Halliburton price pattern. So energy continues to generate signal. Healthcare, right? We had, I think I'm out of XLV. XLV broke out. Let's just make sure I'm out. XLV, Elite, Trading Circle, Trader Log. This system is flying, love it. We're gonna need to look at the Ford. So I'm out of Halliburton and XLV. Oh, I still have XLV position. I still have XLV. Do I have an order to exit out? Maybe it's been a while, so maybe it's time to exit. Oh no, okay, 148.90. So I have an order to exit out at 148.90. We're still not there. So closed half at 145 and closing the rest at 148. Okay, so healthcare continues to generate signals, right? TMO actually, for a few days in a row, we have signals in Thermo Fisher Scientific. QQQ put spread. Am I not yet? I'm at least want to wait till end of the day, but let's see. I don't want to lose more than 50% of that premium because, and honestly, I'm a little bit concerned about end of October, whether I think it's a flip of a coin, whether we will or will not reach an agreement. So I bought it for 376. It's trading $1.50. So it's down, more than 50%. Down more than 50% at this point. I mean, if you're doing dollar cost average, right, or position lettering, then at this point you're down $100. Well, here you can be down actually $150, right? $200. So at this point, you're down $200 on $10,000 portfolio. You're getting close to that 2.5%. If there was no, uncertainty about the meeting between China and U.S., I would not hold it, but I kind of held it, my hedge in April, right? Everybody knew about, but there was a big surprise, right, to the downside. So market did sell off, and I'm still kind of watching. I still think it's a replay of 2018, which it doesn't have to be. I totally get it, right? So here in 2018, right, in September, when they were supposed to meet and they didn't, and then impose tariffs on China, we did have a 10% pullback. So it's a, I don't know, flip of a coin. So for now, I'm gonna hold the QQQ put spread, spiders put. I traded around it, right, several times. So at this point, and if you do want to close, this is where I think this rule is usually helpful, right? Wait till end of day to make portfolio rebalancing, not making trades, but making portfolio rebalancing till end of day. All right, Ford continues to go up, so we gotta watch the Ford. So I do have earnings. Let's look at the earnings. We do have a rally, and Ford continues to grind higher. So better than expected earnings. I do have 13 and a half spread, and right now it's trading at 23 cents, well, 35 cents. It's a 50-cent spread. So it's a 50-cent spread, 13 and a half call. I collected 19 cents. So the most I can lose is 31 cents if it closes at 13 and a half today, or if it, pulls back, then if it pulls back, then then we, it needs to drop below 13.20. So for now, the trade is going against me because I didn't think it's going to break to the 13 level, but we already, Ford, just like General Motors, and another 10% pop. So at this point, I have to watch Ford. Continues to grind higher. I mean, you can hedge by buying stock, right? Because I'm short, right? I'm bearish at these levels. So one way to hedge is to buy a stock. And if it continues to go higher, then at least you're hedging with the stock position. Let's see how's General Motors doing. General Motors is also up. All right, any questions? All right, let me know if you guys have any questions. All right, let's review the other positions while Ford is trying to find support and resistance. You can find, so I think 13 was overhead resistance, right, in terms of position. So this now is going to act either as a repellent or as a magnet, right? Not a lot of positioning in 13.5 or 14. Most of the positions concentrating at 13 level. The other stocks, so Intel is up 4%. It's the high 41.12. And the Neiman Mining down 7%. So worse than expected. And where's the position on Neiman Mining? Let's see, concentration. Let's look at open interest on Neiman Mining. Despite high gold prices. So Neiman Mining 82, so you do have 80. So we were talking about 80, 85 strike. So 84 is overhead resistance and 80. Kind of trading in the range. All right, let's look at the other positions and see if we want to make any adjustments. So Amazon, still in Amazon. Let's see how's Amazon doing today. Amazon's trying to reclaim 50-day moving average, so it's going in the right direction, up 1% going into the earnings end of October. So still long Amazon. Let's see, what do I have? What's my plan of exiting out? So 228. So next exit is 228. I did buy 220. So let's look at maybe trim half of that position. Let's look at positioning. Amazon. I mean, there was a big overhead resistance at 225, which it's 50-day moving average or close to 50-day, yeah, 225. So most call concentration now is in 225. So maybe trim half of that position at 225. So close at 225, 224.50. 224.50. So I added to Amazon 220 and then trying to capture 2%, 224.50. And the rest at 228. So that's Amazon. ES, I do have an order. I think it's getting close. So still long utilities. Utilities have been in strong uptrend. Bought it at $3, trying to exit at $3.90. And what is it trading at? It's continues to grind higher. So it's what's the midpoint between 350 maybe, 350, 360. Okay, so ES is going in the right direction as well. Trying to break out. So utilities continues to outperform. I think today we had what, Duke Energy, I said, or something of JCI, TMO. Maybe yesterday. Let's see. TMO, Halliburton, CMS. Okay, so we had CMS, I think. CMS, I know Duke Energy was in that. So continue triggering the long signal on the utilities. Talked about Ford, continues to grind higher. Okay, so Micron is up 4%. So let's close half of the Micron position. 13. Okay, so Micron. So that was a good signal. So I bought both spreads. So I'm long the spread at 287, and then I long the just shares. Give you a difference, right? Some people are more comfortable trading stocks, some people more comfortable trading options. So if you bought a stock at 205, exit 209, that's about what, 4% move in Micron, right? Short period of time in the week. And then that's half of the position, and then I would close half. Let's see where the next overhead resistance in Micron. So 6, so 220, right? 210. So maybe another 2%, right at that 210 strike. I think that's the, I mean, call wall is at 220, but I'll do 212. Sorry, not 212, oh, it's already 213, 220, sorry. I don't know what I'm talking about. So, okay, one more time. 210, we broke to the 210, assuming it stays, the next overhead resistance is 220, and that's the highest concentration of call. So let's do it 218, 218.20. So half of the position I would close at 218.20 on Micron. So I'm out half of the position, half at 218.20, and then in terms of spread is trading at about 330. So it's up 20%. Right. So if you did the spread right now, you're up 330. Last set was 330, so 50 cents, a little bit less, 40%. So you're up 40%. I'm going to put in order to try to close it at make $1, 380. So that's the difference between option trading and stock trading, right? Options trading, you probably going to wait longer, right? You have to be in the trade a little bit longer. Stock is a lot because of the spread delta, right? It doesn't move one-to-one correlation with the stock. You know, maybe moving 30 cents was this, 30%, 20%. But spread, Micron spread closing at 380, and then the rest of the stock at 218.20. Any questions on the Micron? Okay. So that's Ford, Micron. How's Ford? We're still. Okay, looks like it's. Let's see. Let's look at 15 minutes. Ford. Okay, so still grinding higher. Intel grinding lower. Can you give me a second? Okay. Thank you. Fred, Marvel, maybe there is a trade setting up on Marvel. And I haven't seen signal in Marvel, at least using our models. But let's just look at the traditional. I mean, there's got to be a catalyst, right? For whatever reason, it's underperforming. It's a 200-day moving average. This is more of a swing trading, right? Like similar to my trade in Amazon. But in Amazon, there was a signal. So model picked up, at least it thinks that there is a momentum to the upside, right? Where Marvel is underperforming, it needs a catalyst, probably earnings, right? Next earnings. But, you know, and I would definitely wait till it breaks through this, breaks above 85 strike, because this is overhead resistance, this was the previous high. So as long as it's below 85, I would say bears are in control, but if it goes above 85 strike, then I would say, okay, maybe that's a trigger to go long. Let's look at the positioning. I assume there is a lot of positioning at 85 strike. I mean, kind of equally 85, 90, 95. Okay, nothing unusual, but QVT, etc. All that thoughts. Quantum stocks, QVT. I mean, I'm following Fred's stock on the IONU. I mean, they're extremely volatile, right? Extremely volatile. But obviously, if you want to have exposure to these stocks, you know, it's in consolidation, just like gold, right? You have these vertical moves up, now vertical moves down, right? Above average volume, right? That looks like an exhaustive signal to me. So maybe, especially if you don't think there is going to be, if China-US meeting is not going to be an event, right? Then definitely this is a setup. You know, you're just like here, above average volume, you have a rally. Above average volume, you have a sell-off. It looks exhaustive to me. And now you, for 3 days, you're not making new lows. Usually this is a sign of the bottoming process. It doesn't mean we're not going to revisit 55 or 50, but usually there is more room to the upside than to the downside. You know, assuming that, you know, we're not going to have fall apart in China-US relationship, at least short term. But you can see similar price action: Iran, MP, IONQ, you know, Palantir to a certain firm, you know, TAMP, all these high flying, high beta, high momentum stocks that had a sharp reversal, pullback, and now it's trying to revert, you know, rally. Robinhood. Very similar price pattern. Questions? And for the still at 1350 strike. So it looks like it did get out of the 13 level. So we'll see if, you know, it pulls back. So let me put an order at least. So for Ford. So Ford, let's at this point, I mean, I want to maybe hope for small profit. So let's see, 19. So let's try to close it for 15 cents. 0.15 cents debit, buy to close. Sorry. Ford calls. Close for debit of 15 cents. So buy to close 13.50. Okay. And one thing you want to avoid, right? The risk, the biggest risk is that if you get a sign, right, on this order, on Ford order. So you definitely want to watch this trade, and before market close, you know, especially if it's in between the strikes. If it's in between the strikes, you want to close, because you might get a sign on short calls, and then there's a follow through on Monday, and it rallies another 50 cents. Then you're down, you know, more than 30 cents originally you're thinking about. So the idea is that I put for 15 cents right now. Just, you know, if it's overdone and maybe Ford pulls back, then maybe close it. But if it doesn't pull back, right, if it stays above 13.20 for the next, you know, towards the end of the session, then you want to close the trade, right? I mean, if it's at 14, you don't need to worry about it, because both legs will get us, you know, in the money. But if it's below 13.50, you know, half an hour before market close, then you want to close the trade. And I'll send the alert. I'll send the alert if, you know, when I close it. So something to keep an eye. Vincent, looking at some of the breakouts in Google. Google definitely one of the stronger Magnificent Seven stocks. So Google looks strong, continues to trying to break out. I like that. PSTG, Pure Storage, Public Storage. Sorry, Pure Storage. This is computer peripherals, right? So CHD. I mean, we had signals in WDC, right? Western Digital. Very similar setup. STX, right? Very similar. This is all AI storage space. Thank you. VRT. Just keep in mind that a lot of them are highly correlated to each other, right? This is all AI, computer, hardware, electronics. They all move in tandem. So one thing to worry about is diversification, right? Because if you have P, STG, VRT, AVAV, they're all same trade, right? So you don't want to have all your portfolio in 4 of these positions. This is aerospace defense. I do like that. AVAV. Not a lot of volume, but aerospace in general, not a lot of volume. General Dynamics. In General Dynamics was probably one of my favorite. Yeah, I think GD in that category. But thank you. Yeah, you pick one, suppose, or you just, if you don't want to guess, you can pick QQQ, right? And QQQ looks pretty strong to me. All right, so, but yes. Correct. All right, did I go through all of the positions? Ford, Micron, and then the hedges. So spiders, they've been trading around spiders, kind of opening, closing the trade. At this point, at this point, I'm just gonna wait till and see if there is a resolution to the China-US relationship. Obviously, if market continues to rally, then these will be both will be losing trades. But then, that was supposed to be a hedge, right? So we'll see. Holding TQQQ. Okay. Yeah, a lot of people are doing this leverage QQQ. Right. So TQQQ, I mean, another leverage product, just if you like volatility, that's definitely the way to go. All right, any other questions? Ford is still at 13.15, Intel pulling back. And then looks like Neiman is rebounding. What else? Tesla's down. General Electric is up. ES slightly up. SPX at 6,800. So facing overhead resistance. So right now it's kind of, I would wait at least it gets above 68 level and 6,800 level and stays above 6,800 level. Broadcom, Nvidia rallies. Google is up. All right. So that's all I have for today. Thank you very much. Again, I would say the risk in the biggest risk is in this Ford position. So I'm going to be, Keith will be at the closing bell before end of the day. I will be out of this position, unless it, jumps to 14 level, then I guess I don't need to worry about it. But as long as it stays at near 13.5, you have a risk of assignment. The goal is to get out of that trade. It looks like I got triggered on Amazon, right? It looks like Amazon continues to rally. Yeah. So you should have got an alert on Amazon. So that half of the position got triggered. All right, so I bought at 220, captured 2% here on Amazon, and next exit is 228. Thank you, Vincent. Alert came. Okay, perfect. Yeah. Looks like we fixed alerts, new server, so all the technical issues seems like stabilized. Usually when it rains, it pours, but I think we're in a good spot now. So yeah, you should be getting alerts, SMS alerts, Discord alerts if you sign up for Discord alerts on Tradespoon, and that's all I have for today. Thank you very much. Again, if you guys, Micron is moving up, nice. If you do have time, options, hotline present, right? Keith presents, and I'll be there in this live event. So please join us if you have time. And same thing on Discord. Please join us live. Join us live to discuss market conditions, options trading, an opportunity to meet in person. Okay. Thank you, Discord guys. And then you can find all the recording on Discord. Happy Friday. Happy Friday. All right, Discord guys, I'll see you guys on Monday, next session.